Hi, this is Catherine Scott for drillingcontractor.org. I'm here at the 2013 IEDC Drilling Onshore Conference in Houston, Texas. Today I'm speaking with Marshall Adkins, Managing Director for Raymond James & Associates. This morning, Marshall gave a presentation about the global market outlook for the oil and gas industry. Thanks for joining us today, Marshall.
You bet, Catherine.
So can you first start by telling us what the next 12 to 18 months outlook would be, starting with oil?
Sure. We're worried about oil. We think oil has a lot of structural problems over the next 2 years, maybe longer. The big problems are, first of all, supply in the U.S., which is going berserk. We're seeing U.S. oil supply grow 1 million barrels a day when for all of our lifetime it's been declining. So that's a massive change. But you couple that with a demand destruction or slowing of the demand growth around the world that we've seen post-2008, which I think will continue to happen, then you end up with too much oil. So we've been building oil inventories. Those should continue to build as long as U.S. supply keeps growing and as long as global demand remains at a subpar level. So wasn't a problem this year because you lost Iran, you lost Saudi Arabia, you lost Syria, you lost Sudan. But if Saudi doesn't cut another 1 million or 2 million out of production next year, then we think you're going to see inventories build to record high levels, and that doesn't work. So we think oil prices will come down to force Saudi to cut sometime in early 14.
And it seems like you had good news, though, about the natural gas. Can you tell us more about that forecast?
Well, yeah, the natural gas side is almost just the opposite. The lower oil prices go, the better it is for gas. I know that sounds kind of weird, but a lot of the supply growth you're seeing in gas coming from the oil wells we're drilling. So if you slow oil drilling a little bit, maybe gas supply growth slows a little bit. Secondly, if you see $2 gas like we did last year, what happens? Demand goes up. So we're seeing a resurgence of demand, and if oil falls a little bit, we think that structurally the gas market will tighten. Add on the colder winter we've had this year, and you're actually, the gas market looks good. Now, good being $4 to $4.50 per MCF gas.
And then you also talked about the rig count. Can you kind of elaborate on what you talked about in your presentation?
So a couple of things going on with the rig count. If oil falls, obviously that's not good for the rig count. So we're looking at overall oil prices coming down, and that pulls the oil rig count down. Gas rigs should move up, but not as fast as oil declines. So we're looking for a generally declining rig count. Layer on top the shift to pad drilling. What you're doing on the drilling side is you're drilling a lot more wells with fewer rigs. So those two, the confluence of those two issues leads us to believe over the next 2 years, 18 months, that the U.S. rig count gradually deteriorates.
And then can you also tell me a little bit more about what the economy is doing for the industry?
All right, so what happens is if first of all, the global economy is going to be under pressure because of all this debt leverage that we've built up over the years. One way to help kickstart the global economy is lower oil prices. So we actually think lower oil prices will be a boon to the rest of the global economy. Now, the U.S. in particular, it's exceptionally good because we're the ones seeing all the growth. So from an impact on the U.S. economy, this surge of both U.S. oil and U.S. gas is incredibly bullish. We can compete favorably with any other country in the world using natural gas as a feedstock. So yeah, I think the shift to horizontal and the impact it's having on U.S. oil supply growth and gas supply growth is incredibly bullish for our country.
Well, great. Thanks so much for joining us today, Marshall.
You bet.
And for the insightful presentation you gave this morning.
Indeed.
Thank you for joining us. This has been Catherine Scott with drillingcontractor.org.